It's the first of the year. This is the first podcast. Man, welcome back. Thank you for guys who've been sticking with us. We're going on 10 years, man. It's been a ride and we're almost there to the 10th years mark. We made so much money along the way. And I have a really, really special guest. I think everybody would like it. Definitely for the traders, the thousands of traders that we have, and also long-term investors. Cary Artac, who's with me for Wicked Stocks. He used to be a part of the Chicago Board of Trade. He used to trade on the floor. You guys know me. I've been a trader for a long time. He's been doing it for 29, 30
Too
plus
long.
years. Too long. You know what I mean?
Yeah.
Too long. But man, I'm actually excited to have him on. He actually has a YouTube channel, Wicked Stocks. He does with his I think your son, right?
My son and my daughter.
Your son and your daughter. I think that's really amazing. You don't really see that very often, but man, this guy's really smart. I really like what he's doing. He's gonna be dropping some stocks. I know everybody loves when we drop stocks. That's their biggest thing. Everybody comes here, drop stocks, drop some knowledge, give them some wisdom, and everybody leaves with some gems. But let's go over. Everybody was trying to tell me we need to go over some stocks before we get started, so we get them out the way. Root. We bought it February 9th, 2024, $8.92. Everybody knows who follows the portfolio, 290 shares. It is today at $77. We are up 958% on that. I think personally, by looking at the chart, we're looking at a channel downtrend. For you guys watching on YouTube, I would pull up the chart, but go check it out yourself. We're gonna pull up some charts today, but go check it out yourself. But it's at $77 or up 958%. I think is a channel down trend. I think we got a good chance it'll probably go back up to $80, $90 again. I haven't sold any of my positions at all. Still clean 290 shares. I always regret that I didn't buy more at the $8, $9 mark at the beginning of 2024, but we're here now. This is probably the one everybody wants me to have a conversation about. Rich Tech's robotics. We all know I had to sit down with the president. You guys seen it on YouTube. You guys seen it on my website. It's already up on Spotify, Apple, Amazon Music, all the channels. We bought that at 85 cents. We bought 2,258 shares. I sold half of my position at $4.59, which is over 490% profit. Those are rarities. We bought that December 13th, 2024. Those are rarities. Those don't come out often. You guys know the path I'm taking with the CEOs, interviewing publicly traded CEOs. So I sold half of that position. Right now, I think it's like 2 something. It came down quite a bit. But most people know I sold half of that position. I'll let you know. Tesla, pretty sure we're probably going to talk about Tesla on this later, but people who know we had Tesla at the beginning of last year, $281. We had 23 shares. We sold it at $423. I know a lot of people said we sold it early, but it only went up to $488, and then now it's back down to like $390. So we missed $70, but it is what it is. You know what I mean? Whatever the case may be. But Super Microcomputers, you guys know we bought it at 17.98 cents in November. It went all the way up to $42, came down to $32. You already know the CEO said we're not getting delisted. So I expect something big when they file the return. I'm pretty sure. I personally think, my opinion, looking at the chart, looking at the foundation, looking at the stuff they're selling right now, I think it's going back up to $120. I hope. Sorry, your name again? Cary. Apologize.
No problem.
Cary had some opinions on that because I think I'm gonna start. I personally think I'm gonna look for an option play on the call side to hopefully for sometime at the middle of the year we can see over $70. We're down on Dollar Tree. We're down 32% on Dollar Tree, and we're down on Douglas Elliman. But Cary, I'm gonna let you introduce yourself. I had to just get that out of the way for the first 2-3 minutes, because everybody wants to hear it. But besides that, man, tell us about Wicked Stocks.
Well, first off, I want to thank you for your warm and enthusiastic introduction of me. I go back, I was 23 years old when I got a job at the Chicago Board of Trade as a runner. And over the next few years, I worked my way into being a trading clerk for a successful options trader. Then I went across to the Chicago Board of Trade in '89, where I took that options experience and worked with a 30-year Treasury bond futures trading firm. Um, at the time, I was trading, but I was also analyzing the markets, and I just sort of got caught up in the analysis. I loved it. And in fact, developed a reputation on the trading floor for being a talented technical analyst. So along with the trading, I would, provide information to other traders. And pretty soon I've got traders coming to me wanting to pay money for it. So I thought, well, this could be, let's try this. And so I do love the analytical side of the markets. And in 1996, about 10 years, I got to the trading floor in '86. In '96, I started Artac Advisory. And so the Chicago Board of Trade is all futures primarily. And so I still have Artac Advisory, and that is a commodity trading advisory where I use, these are analytical techniques that I developed really sort of, they were already pre-existing. One of the key forms for my analysis is the channel formation, which I can show you in a moment. And a properly drawn channel is a trend-defining structure, a trend-defining line study, and provides, the basis of many of our buy signals or buying downside retracements into channel support, buying a breakout with a settlement above channel resistance, et cetera, et cetera. And so I took that information that I'd use on the trading floor and I started the advisory service, which is still in existence today. We're going into our 29th year. Primarily on the Artac advisory side, it's business to business. I'm selling this information to large scale commodity producers. I mean, sure, there are speculators, and in the beginning of the analysis, they were all floor traders, all speculators, but that doesn't exist anymore. And so, primarily, I'd say 90% of my subscribers on the commodity side are some of the larger commodity producers in the country, some of the larger ranching operations where they subscribe to my live cattle and feeder cattle, grain growing operations. They subscribe to corn, wheat, soybeans, crude oil. S&P 500 E-mini futures has been one of my basic letters for about 30 years. And it was during COVID in 2020, 2021, my daughter was graduating university. And the entire world was shut down, and she made note of the fact that many of her colleagues, contemporaries, millennials, 20, 30 somethings were trading the stock market from home and attempting to day trade it. And she's like, Dad, we should build a website and start providing analysis for less experienced traders, 20 somethings at that time primarily, who need kind of an early lead on buy signals or just sort of a basis for a market analysis. And so I kind of quipped back to Maddie, and she was in the web development at the time. If you build a website, I'll start providing analysis. And so that was the basis of Wicked Stocks. Wickedstocks.com is the website. And her little brother graduated a year later with a double major. He's got a math degree. He was real interested in the technical analysis side of it. So it really is the three of us. And we're in our fourth year now. And, it's growing at a nice, steady pace. Because of my experience in speaking to more experienced traders, what I thought was going to be primarily a focus on new beginning traders, I'd say about 60-70% of our clientele are more in the mid to more experienced category. But we're doing, I think we go to great lengths to speak to the needs of the less experienced new trader who might be a little apprehensive, might lack confidence. And I think the channel structures are just beautiful ways to illustrate trend development, trend structures, and the violation of trends. And so you act either inside the channel or you act when the channel has been violated. I actually have some samples. If you want me to walk through, some charts, we could do that unless you have any questions.
No, definitely. I also think it's like I said before, I think it's really awesome that you do this with your family, and it's definitely nice to have you on the podcast because I think it's going to give a better perspective on, different way of looking at charts, a different way of getting into trades and getting into investments for the long run. Or I don't know if you're in the shorting, but I would love to hear it all, whatever you got. If you do have something you want to show us, I definitely want to see it.
Yeah, I cover both sides. I say for those comfortable playing both sides of the market, in other words, those who like to short stocks or reach for out of the money puts, we do give those strategies. Channels are the basis of my analysis, but I also use speed lines and Fibonacci. I've got 3 or 4 instruments that I use continuously, but the basis of my trend identification are channels, and I can show some if you like. So share my screen. Should I do that,
Yeah,
you think?
yeah. Share your
All right.
screen.
Okay, there we are. So I'm going to go to my analytical software. And the first thing that I would like to show, can you see this, Kenny? Can you see my charts?
Yes, I can see your
Kenny?
charts. Yes, I can
Okay,
see
great.
it.
I just wanted to confirm. Yeah, so I'm just kind of showing the construction of a chart. This is actually GE, General Electric. I should have had this labeled on the chart, but this is a weekly bar chart. And by the way, most of the charts I'm going to show are weekly charts. This chart goes back some 10 years, and it was back, and we did a video on this. This is a trade recommendation at the time. Back in May of 23, we had a buy signal by closing above this 3-year channel structure. And our anticipation was 164.34, basically a doubling over time. We did not anticipate the accelerated rally that did occur basically from November over the last year or so. And I just wanted to just show that, we closed above the channel. We spent several months. We even fell back to it in October of 23 for a retest before launching. And I can also show kind of a near term. I can zoom in here a little bit. And at the time, we also showed this on one of our updated videos on GE, that after having retested this base of long-term support, now that we've closed above it at 84.22, we several weeks later had a buy signal above this clearly defined channel resistance that really sort of set this entire rally in play. So that's just kind of, I'm just using this as an example to show how we draw these things. I can also take a look at MicroStrategy. I know it's a stock you've covered recently. And we also had video analysis, trade recommendations when back in December of 23, we had a buy signal. I'm just showing, I know this is not relevant analysis now, but just showing how we construct these. We basically take a trend line off the extreme lows, this low from May of 21 against the low of May of 22 a year later, and we project that same angle of descent off of the extreme high from February of 21. And you can see how we topped out here for about a month before closing above it in December of 23. Once again, we rallied for a month or two before falling back to channel support, and then we took off. And our objective at the time was just a retest of the 131.50 high. So that was more than a doubling of the price that we were expecting at the time. We overshot the runway. I'm going to zoom in just a little bit on the next chart and show you kind of a sequence of trades that we then got into this sort of congestive process. And in October of 24, last October, we closed above this horizontal channel structure at 184.70. And our objective on that move was this rising channel top. This was a near-term 3 to 5 week play. So it was just sort of a quick in and out. You buy it with the settlement above, 184.70, and you're taking profits at 266.35. And what occurred then in November was that we had this outside week, and we closed just above this channel top, which in my opinion set off this hyperbolic rally. This is pretty significant, up to 543 even. Since then, we've retraced back to this meaningful channel top. So that's the beauty about channels. You can continue watching them through time. Even after you've violated them, they can hold. This is a great example here. Once again, going back to December of 23, once you close above it, you've got the buy signal, but then it presents another buy opportunity on a retest. And that pretty much, those are the examples I'm using. I can move on to, if you like, I'll take a look at some other charts I have prepared, and these are more relevant. We do cover Apple on a regular basis, on a weekly basis at Wicked Stocks. And this is a 5-year channel structure that we'd been anticipating since the June buy signal. This was an AI announcement by Apple, and that set off. This is a 1-year channel structure we settled above back in June, and we were then anticipating a 3 to 5 month target. at the 259.52 channel top, which is when we tested it in December. It's now at 260.99. That's another important point to make, that if your viewers, if your listeners are following this, that these are moving targets, and it's a very dynamic approach to what I call trend identification. And so what you see at 259.52 now from December has risen a bit to 260.99. This is a 5-year channel structure. And once you test a long-term channel, or any channel, it could be on a 30-minute bar chart, it only goes back 3 weeks. But in this case, it is 5 years. And because we've tested a 5-year channel top, you must respect the market's potential for falling all the way back to channel support. Now, I'm not about to say that I'm expecting 176.09 over the next, year or so. The last time we covered a similar distance in terms of just the channel itself was off of this December 21 high against the January 23 low. A little bit over a year this took, but it was mostly a consolidated framework with a slight lower low, lower high, rotational dynamic. But the point I'm making is this could take a full year before potentially reaching 176.09. And once again, I'm using a channel structure on that same chart. I consider 218.87 a realistic 2 to 3 month target. I've been mentioning this to our subscribers now since we put that high out in December, that by some point, February, March, we should fall to this. Now, I also have other channel structures in the daily chart. If you watch our Apple analysis, I come in to each episode or each video, each weekly video with probably 12 or 15 charts. Some of them are near term in scope. You've got one right here. That next week is at 231.17. That's a kind of a downward pivot point to 218.87. But if I'm looking at and by the way, this low 230s, 231.17 may well absorb January lows. And from here, we can round back up into the low 260s within 3 to 5 weeks. So that is kind of your 3 to 5 week time frame. But if I'm breaking it down into the 2 to 3 month time horizon, which is kind of your big picture analysis, I do think 218.87 is a realistic 2 to 3 month target that we're about 3 weeks into now. And that 2 to 3 months does allow upward rotation back into the low 260s before potentially falling away again. If we were, by the way, to close below that 231.17 formation this week, then we could, within 1 to 2 weeks, test 218.87. And I consider 218.87 rising weekly, an area you can buy on a quarterly basis. We can round up from here back into the low 260s perhaps, but if we then settle below 218.87, yes, 176.09 does become then a realistic, what I would call a 3 to 5 month target, I think realistically would be anticipated. I'm going to move on to the triple Q if it's okay with you.
No problem. We're big on
the NASDAQ 100
NASDAQ.
ETF.
Yeah,
so we cover the
one.
NASDAQ 100 ETF, the triple Q, every single day at wickedstocks.com. We've got kind of a wide following of what I call day traders as well as investors. But the day trade segment loves the daily triple Q analysis. And I do cover the big picture always on the triple Q. And really what I'm showing here is, once again, this is a 5-year channel top. And I just showed you how in Apple, I'll go back to this chart, Apple topped out at its 5-year channel top and has since been falling away, whereas the triple Q, which Apple comprises a healthy portion of, I think close to 10% of that index is Apple. We closed above its 5-year channel top about 5 weeks ago for the first time. I also like 1% margins. On long-term line studies that span 6 months or more, when you close above this black line, the actual channel top itself, which this week for the week of Monday, January 13th, is 516.62, I want to see it by a 1% margin. I can zoom in here a little bit. That green line represents the 1% margin. The 1% margins actually can act as their own resistance. So I'm never convinced of a long-term buy signal unless we close above the green line, or in other words, 1% beyond this channel, which this week is 521.78. I don't see anything significant about this, but I'm just using it for illustration purposes that we did, in fact, the week of December 2nd, close above that 5-year channel top by a full 1% margin. And at that time, I was mentioning much higher price points as a long-term objective, the full channel extension over the next few years. But what has happened is the market, in part because of the Apple sell-off, I think, has fallen back to close back below not only the channel bottom, but also the 1% downside threshold of 511.45. So we're very specific with our support and resistance levels. I think that's the beauty of a channel constructions. If you construct them properly, 511.45, we're in a sell signal now. It's also worth noting, I'm going to move to the next chart here, that the week we put out this high, if you're a candlestick follower, it's a bearish engulfing pattern. We put out a new all-time high, and then we proceeded to fall back and close below the previous week's low. That was an early sign of an overbought market, but I wasn't convinced until we actually closed back below the channel, which we did for the first time last week by the required 1% margin, and we closed below the low of the high. And in pure bar chart analysis, closing above the high of a low or below the low of a high is in itself a sell signal. So we're in a series of sell signals, several over the last week, that suggest lower price activity for the NASDAQ. I have a saying I've used for years, that the rejection of a long-term buy signal is in itself a valid sell signal. So we are in sell signal mode for the NASDAQ 100, for the triple Q, and I am anticipating over the next several months, similar to how we find channel bottom support in Apple at 518 and change. Apple's come much closer to testing it. It's about halfway there. I see the NASDAQ 100, the triple Q, likely to fall back over the next several months to the 459.08 rising channel bottom. This will be a big test. We can bottom out here into the second quarter and round back up again. If we close below 459.08, that is a significant sell signal, in my opinion, into later 25.
So why do you think all these sell signals are happening? Why do you think everybody's selling right now?
Well, I think the market's a little spooked. I've got first off, I'm going to answer that question in part. I want to show you the S&P 500 or the SPY. Now, one of the concerns I've had with my subscribers is the fact that while the NASDAQ threw off a long-term buy signal, the S&P 500, or as represented by the SPY in this case, this is another 5-year chart, has been of the opinion not so fast. The SPY has yet to even test its 5-year channel. So it is not in breakout mode and has never actually entered it. But to just simply answer your question, I would say part of it is, the new administration. I think the threats of high tariffs is spooking the market. I think it'll add a higher interest rate element to the equation. I think there's no certainty, obviously, as to what's actually going to happen, but there is the risk thereof. So I think, and that is just one of them, by the way. Now, obviously, the big sell-off last week was the fact that the Fed is not likely to lower rates anytime soon based on these healthy employment numbers that came out last Friday. And so the economy is still in pretty strong state of affairs. And with that in mind, interest rates have little room to continue south. We do cover interest rates too with the TLT, by the way, on a relatively frequent basis. But the SPY has got a 1-year channel bottom. This is also found in the S&P 500, which we cover. We tagged that channel bottom back in August and came off of it nicely. And we were then anticipating channel resistance, which we failed to do. But I don't know, Kenny, if I answered your question or not. I think there's just a lot of apprehension right now. Will the tariffs be activated? Will we go into a trade war, a tariff war? Will inflation and interest rates continue climbing because of it? And if that is the case, I do think, well, the NASDAQ, which has that chart that has that target at 459.08, this is a 2 to 3 month play. I think
how would you play this, the NASDAQ right now? Like, let's go over the scenario on how would you go out and play the NASDAQ right now?
I'd be short right now below 516.62 in the triple Q. Any upward
where would you be
retracements
looking out? Where would you be looking to exit?
Well, if you're a big picture trader, let's say you're reaching for 460 strike out of the money puts, and this is a 2 to 3 month play, I'd go, you've got a myriad of opportunities, obviously, in options. But if you're just looking for, just a simple reaching for an out of the money put, I wouldn't reach for one that expires in 2 months. I'd probably reach for one that expires in 4 or 6 months because of this 2 to 3 month likelihood. But that is one play, reaching for 460 or 465 strike out of the money puts that don't expire for at least 4 to 6 months or so. we also break the NASDAQ and the triple Q down into kind of the day trade format too. So I'm kind of showing just sort of big picture analysis. I do have some Tesla charts that just show daily charts as well, which I can get to in a moment. But if I were to answer your question, I would say the 509.29 to 516.62 region, it's about a 5-point zone of resistance this week, is your short sale zone. Now, if we close back above 516.62 at the end of the week, then it neutralizes bearish expectations. I will jump to this chart here. Here again, we've got channel resistance. So if we do come off of this and close above 516.62, within a week, by the end of next week, I would expect 531.99. And that is a near-term channel that can contain weekly highs, and if settled above, forget about it. We're going to continue higher once again. And I would then look for other channels. For instance, I might look for something, like this. That would be this week at 562.35. And by the middle of February, it's at 580. So that would be my objective with a settlement above 531.99. But for right now, to answer your question more clearly, I would be short or get short, either at 509.29 or you scale into a short position up to 516.62, because I do think the downside is likely. I can reconstruct this channel bottom here that this week is at 459.08. There will be secondary sell signals. There's one right here, just sort of waiting for us. And this is a channel bottom at 492.83 that you can see this week. I'm sorry, this week is 495.98. Let me write that out. So 495.98. And this is an area. So, I kind of break things down into time frames. We cater to day traders, 3 to 5 day swing traders, 3 to 5 week swing traders, and 3 to 5 month near-term investors. And the beauty with technical analysis is you can cover them all, and they all exist kind of independently. I would say the 3 to 5 day dynamic remains bearish this week below 509.29, anticipating this channel bottom this week at 495.98, where a 3 to 5 day swing trader could actually not only cover a short position, but reverse and go long back into what I would call the 510s long-term resistance. Closing below 495.98 at the end of this week is, in my opinion, the final shoe to drop on anticipating this 460s, longer-term objective. So I don't know if I answered your question.
No, you did. I just the reason why I asked that question is because people got to understand like why this stuff is happening. Sometimes they got to be a conviction, like I like to say, conviction behind it, because you're not seeing on the S&P what you're seeing on the NASDAQ, and
Correct.
They're looking totally different. Usually all three, Dow, NASDAQ, and the S&P will kind of be in the similar range, but in this instance it's not. So how you play the NASDAQ,
the AI. You've got the AI phenomenon that has fueled the NASDAQ.
I mean, correct. People got to understand what I'm trying to get people to understand, why this is happening. And if you're saying it's tariff, like that's a good investment thesis. Okay, I'm entering this trade because people are scared of the tariff. You know what I mean? The tariff of the high price tariff that's coming along. The S&P, the reason why you're not seeing a sell signal, you're still in the buy signal channel, is because maybe what's your reason? What's your opinion why the S&P is at the current spot is at?
It's an index, of course. It's not as heavily dominated by tech stocks, AI stocks, especially. You've got your more blue chip, Fortune 500 companies, and so they're kind of in a different climate right now. I would sell that 630 area. Let me go back to this chart. If we're talking the SPY and the S&P 500, now we do the S&P 500 as well. The SPY on a daily basis. This is, if given the opportunity, a great area to get short and stay short on a longer term time frame, 5-year channel top. The SPY and the S&P have yet to actually test their 5-year channel resistance. Now they are falling away like the NASDAQ. NASDAQ has led the sell-off, obviously, with the settlement back below this long-term channel top. It is now on its heels, on the defensive, and I think likely to continue south into the 460s, as I say, over the next 2 to 3 months. So, you can trade the S&P that way if you like. I know I've got some traders who go short on that in the SPY, based on what they're seeing in the triple Q. But for right now, we've got 559.99. I see this as kind of a 1 to 2 week target. This will be an important test for the SPY. And if the Nasdaq, and this is where it gets a little confusing. If the Nasdaq does indeed follow through all the way down to 459.08, there's little doubt in my mind that the S&P 500 or the SPY will eventually violate this one-year channel bottom, which will set off a meaningful longer-term sell signal for the SPY. So it becomes kind of a mixed bag where you're looking at one and you're looking at the other. Most people trade
It is a mixed bag. It's a completely mixed bag, and I completely get what you're saying. If you go back to the S&P the SPY, if you go back to that, I want to like get everybody to understand it's like the reason why he's saying 1 or 2 weeks for me to understand as well. The reason why he's saying 1 or 2 weeks is there's no real conviction there. So anybody who's jumping on this and think they're going to get a short play out of this for the long term, it's not really going to happen. I would wait for the conviction under 555. Like I see that you have the channel at 559, but I'll wait for a definite close on a close date under 555. More likely you're going to see a rebound back to 560. Am I correct? Do you feel like I'm correct by saying that?
You mean a rebound from 555 to 560?
60. Let's say like it goes below 559. Me, for conviction wise, I have to see a close around 555. For me to feel comfortable that we're heading in a downtrend.
Sure. Well, I comply with that because that would be a settlement below this channel bottom. And this is
Correct.
a one-year channel structures. Once again, I like to throw in a 1% violation, which would be about 5.6 lower. That actually correlates quite well with your 555. It's actually a little bit lower. So if we were to close 1% below this, then we're in a sell signal mode. Yeah, and I would expect
that.
Yeah,
that's what I'm trying to say. And then usually you kind of see a rebound when you see that kind of downtrend, and there's like a rebound close to the 559. You're probably going to see 560. That's when I would consider entering a short position. I wouldn't enter a short position where we are now.
Sure.
I would be on the sidelines more likely right now because this to me is undecided.
I agree. I agree. We do have this sort of outside week negative settlement. The emphasis is heavy here, but there's nothing to say we can't spring back. Right now, as far as the S&P 500 or the SPY in this case is concerned, we've got this breakout up here that if we come off of this low, if we don't retest this low this week and we start trading up, this is your sellable resistance for 1 to 2 week, 2 to 3 week, traders. 3 to 5 day swing traders can sell the 600.12 to 604.50 area because from here we can fall back to channel support. Within 3 to 5 weeks of testing it. That's
and I wouldn't take that chance either by shorting that because any news that come out, anything that can come out, or anything that can happen in the market that could change the direction midstream. I try to encourage people to wait for confirmation, even if you don't get all the money on the table. You're better off getting 20-30% or even 10% of the money than try to get in super early because you think it's going to be below 559. If it doesn't
this
happen,
is a great it's a great point you're making, actually. Like some people are reluctant to buy weakness. It's like buying into a falling knife, at 559.99. Am I really going to bottom pick this? Some will. Some love to trade that way because they know they're getting good price location on what potentially could be a good low into the second quarter and we can round up. Others will wait for a sign of strength. And for me, if we were to fall to this channel bottom, let's say this and test 559.99, I would then, I'll just show you exactly what I would begin doing. I would begin doing something, let's say that there's a low there. This would be my new sort of resistance, which is now on 596.68. In other words, whether you sell 596.68 as a 2 to 3 week swing trader, or if you did not buy 559.99, where do you then buy it? If you've got strong conviction and you're looking, longer term, like through the rest of the first quarter into March, April, it would be a settlement above this newly formed channel.
I would wait till 575. And then that if it closed above 575, that would be my strength. That would tell me,
Sure.
okay, this is my strength. You're probably going to see after it closed, maybe the next day or two, or even 3 days, you're probably going to see a retracement back to around the 565. Usually that's how, if it retrace sometimes it doesn't retrace back, but if it does, that's when I'll enter on the buy side. And same thing I would
Hmm.
say for the short side. I would wait until it get to 555, and that'd show me the strength to the downside. And then usually a couple days will probably retrace, and then that's when you enter a short position and probably catch it at the 558, 559, and then ride that down to like maybe 530.
Sure.
525 on the short side, and
I
then
see.
to show you strength on the buy side, I would wait until it closes above 575, and if it
Hmm.
retraces a little bit the next couple days, I would look for an entry position and then ride it back up to the what 600. You know what I mean?
Hmm. Low sixes,
So
low 600.
low
Yeah.
sixes, yeah, low 600, and then if it and then sell half of my position from there, and then
So
let the
you're
rest
you're
ride.
talking kind of your time frame seems to at least the way you're expressing it now is like 3 to 5 days, 1 to 2 weeks. That's kind of what you're suggesting now, right?
Yeah, try to like for entry positions, you know what I mean? Like
Sure.
let the confirmation happen. There's a
Hmm.
lot of traders, definitely a lot of traders will not let confirmation happen. They'll
Right.
see, oh, it's breaking down, it's about to head towards the channel. Let me get in now to get extra profit.
I
I
see.
think
Right.
that's where
Yes.
people the temptation is to get extra profit. No, just wait for confirmation. There's always money
Yes.
to be made, and
I
you're
mean, the
gonna make.
crux to successful trading is in the trade execution, money management elements, the risk management. That's really where the successful trader departs from the not successful trader. You can have good analysis, but you don't really need great analysis. What you do need, though, is a disciplined approach to, yeah, I think, conservative risk management and not really giving back 2% of your total trading capital on any endeavor that happens to be a losing proposition, to preserve capital. One of the beauty with a solid risk management approach is it keeps your trading psychology balanced. Without the element of solid risk management, disciplined risk management, some system that you've developed for yourself that you've used time and time again. Now you've got the confidence. Now you're less susceptible to the extremes of fear and greed. You can leave your emotions at the door. You can just sort of trade the markets as you see them. And I think it really is risk management, trade execution strategy, kind of what you're describing now. If you can develop it and you've got a sort of a rhythmic approach and approach that you feel comfortable with, that is really the essence of successful trading, in my opinion.
Yeah, 100%. Me patience, not being too patient, but patience to confirmation lowers your risk. You want to
Absolutely.
be you want to be in a trade that your risk is so low that if you the trade does go against you, it has to be an outside source. It has
Hmm.
to be just a bad day in the economy. Like
Yeah.
that's
A
how
surprise
low.
moment. Yeah.
Yeah, like like I hate to say it, like there's a bomb. You know, what I mean, a bomb happened, and it just happened to happen. Like for example, a stock. It just let's say Pfizer happened at a Pfizer factory, and then the stock starts to tank. It has to be something like that. You want to lower your risk as much as possible, get more confirmation trades, but also I would do it in a blue chick index stocks. That you know what I
Hmm.
mean? You don't want to I
Sure.
always want to make sure that's clear. Like microchips and small cap Russell. I tend to tell people to not to short those things or not to buy option in those things because those don't need a outside source. It could just be a massive whale, a big
Oh,
trader
sure.
just waiting for the
Yeah,
build up
you're
to pull
absolutely
the rug.
right. I've
So
learned that time and time again in the commodity markets. When you're in a
yeah,
thin market, watch out, and that's
liquidity
why
is a big thing.
it is. It very much is, which is what I love to cover the SPY and the triple Q. They are the largest trade entities in the universe. Their volume dwarfs just about everything else. And so your spreads are tight. You can get in and out quickly. Your stop losses are typically going to hit to the very tick. And that's a great thing to have. Whereas if you're trading a small cap stock that trades, I don't know, let's say 300,000 shares a day or 20,000 shares a day, look out. Anything, a little
That's a
sneeze
rug
can move that
pull.
market substantially.
That's a rug pull. You know what I mean? I like really, really tight spreads. And that goes for options, shorting, buying, really, really tight spreads. You don't want spreads that I personally I don't like anything above 2, 3 points away. You know what I mean? Like I
Hmm.
try to like if like the spread got to be really close. Like for example, options are probably the best example. Like if it's 70 cents a contract, you know, I mean that the bid 70 cents, the ask got to be like 71.72. Like
Sure.
that's where I like it to be, in
I
my
see.
opinion. You know what I mean?
Hmm.
To like something really, really close. Like I know I can get in and get out, not waiting for, you know, your shares to be sitting on the market when your price hits, or only get half of your contract sold.
Right. Absolutely. No, I think that's a good approach. Um, Definitely. But you want to take a look at Tesla?
Yes, I do. I know everybody's gonna be wondering about that. Let's take a look at Tesla, because Tesla, in my opinion, this is my opinion about Tesla. I think Tesla is probably going to have the next 4 years is probably going to have probably the best 4 years of that company. It's
It may
really
well.
it's tied close to the presidency. I just think it's going to be, and that's just an investment thesis. You know what I mean?
Sure.
That's just an investment thesis. I think what you're seeing this $100 down, like that's not a surprise. Anybody who's like, oh, I can't believe it's $100 down from the high, you guys shouldn't even be surprised by that. In 2 months, it
Mhm.
rose over 200 bucks. Like,
Well, yeah.
yeah, you shouldn't be
You've got
surprised
this
about
sort
that.
of vertical move. And so when these
Yeah.
vertical moves happen like this and volatility explodes, you're going to have these wild swings. And I'll go back to, I'm kind of backtracking a little bit to, now, by the way, on Tesla, we cover for free on YouTube. Your listeners might like this, daily Tesla and daily NVIDIA analysis. And it's kind of a loss leader. We spend precious time and energy and we love it. But it really is to deliver the same product for free in Tesla and NVIDIA that we provide every single day in wickedstocks.com, in the SPY, in the Triple Q. And so many of our viewers of the Tesla and NVIDIA daily analysis on YouTube eventually become subscribers to Wicked Stocks. So that's our angle, so to speak. But I'm just kind of backtracking here. This is a 2-year channel structure. Now, we had this as an objective. I'm not going to go that far back, but when we reached this objective, we pushed through it and settled above it a week later, and we cleared that hurdle. 341.72 is a 2-year channel top. This is a weekly chart, goes back some 5+ years. When we closed above this 341.72 channel top, we mentioned volatility was still restrained, as you can see at that time, that the 50207, 50422 now 5-year channel top became a 3 to 5 month target. And it took about 3 to 5 weeks before we came close to reaching it. 488.53 was the high. And that week, that channel top was 50207. So we didn't test it, but we did fall away. And when we fell away, and I'm going to show kind of the beauty of channel structures and how they can call the market. When we fell away, I'm going to jump to the daily chart right now and show that it was 2 weeks ago, actually tomorrow, that we opened and closed below a steeply rising channel bottom. This is after that 488.53 high. This was a sell signal for us. We'd been mentioning in Tesla, our Tesla analysis, that when we closed below the 429.41 channel bottom on that Monday 2 weeks ago, that we were then anticipating a retest of the 341.72 channel top, that long-term 2-year channel. That remains in effect. Following the settlement below the 429.41 channel bottom, I'm jumping around a lot. We have a new descending channel. So I call this a dynamic approach to trend identification. I've been doing it for years. So we still have, of course, that long-term channel bottom way up here that we settled below 2 weeks ago. And it's still relevant for day trading and such. But really, in terms of our trend structure, lower low, lower high format, you've got this 406.60 descending channel top on the daily chart. That is Monday the 13th. And just so you know, this changes on a daily basis. On Friday, this Friday, 5 days later, Friday the 17th, it's already down to 383.11. If we close above this structure, I am actually expecting a resumption of that 504.22 objective. But until then, holding below 406.60, a sellable resistance area for 1 to 2 week swing traders, I'm anticipating 341.72 over the next couple of weeks. 341.72 is once again that long-term 2-year channel top that can act as solid support where we could bottom out into the second quarter. And from here, I will then say, once we test 341.72, 504.22 becomes a 3 to 5 month target. We could trade inside of this band through the rest of the year, perhaps. Now, once again, I'm going to take you back to this chart that if we close above 406.60, I've got a 2 to 3 week target at 504.22. And that 504.22 is a 5-year channel top. This is the same 5-year channel top that Apple tested 3-4 weeks ago. This is the same 5-year channel top using the same sort of a framework that the NASDAQ closed above and then back below for the first time last week. And this is the same 5-year channel top that the S&P 500 has not even come close to testing. I will say, and I do like the A/B counts. I've used them for years, and this is the last thing I'll talk about Tesla. If we do take out this 504.22 channel top, I see what I call kind of the full swing, which is A minus B plus A. So you take that November 21 high, you subtract the January 23 low, you add it to the high of November 21, and you get the full swing, and that would be 727.17. That would be my next big picture objective if we were to close above the 504.22 channel top in the coming weeks. But, you know, we're a long way from that right now.
So I just want to bring this up. So
Sure.
if we close above the 417, because I did a video, if we go under 423 about 2-3 weeks ago, I did a video where it's on YouTube. We go below 423. Don't be surprised if you see anything below 350 for Tesla. A lot of people was like, no, that's not happening, but it's clearly happening. But
well, what happened here, if I could just cut into exactly what you're saying right now, that week that we closed below this rising channel bottom, this was on a Monday. And on Friday of that same week, we then also closed below the low of the high, which I talked to you about before, as especially for wild swinging market like this, closing below the low of the all-time high is in itself a sell signal. So we had a sell signal early in the week when we closed below the 429.41 channel bottom, now 469.52. And then later in the week, that was completely confirmed with the weekly settlement below 417.64. So yes, I think if we close back above 417.64, I am in full agreement in terms of bull trend resumption, because that would also involve a settlement, of course, above this descending channel top, which I'm using as my upward pivot point, dropping into the low 380s by the end of the week.
I personally think that Tesla is definitely gonna break past 404. I think we need to go through the retracement of the $200 upswing that happened between November and now. That needs to happen. Once that cools down and we get into an area of settlement, which I also think about. I said like under 350, we should be buying back in. I said that in my video as well. We should under 350, we should be looking to buy back in.
I agree. This could be the buy opportunity, 341.72, and climbing every week through the rest of the year. Because
but I would wait for confirmation. I would wait for confirmation of a retracement.
You mean upside confirmation?
Upside, to me, I would. Once you see that 340 area under 350, I would be keeping my eye on it consistently. I like to tell people, put alerts. Get your alerts on your portfolio. Whatever. If you use TradeView, use whatever platform you use, Charles Schwab, E-Trade, whatever. Under 350, you should have alert at 350. You should have alert at 345, and you should definitely have alert at like 342. To definitely, if you're playing,
there are some traders that I work with who would actually have a resting bid at 342 or 341.80, and then they would have their stop loss placed below that, whatever their risk management is. I mean, that is a valid approach as well. Obviously, it's a little risky because you're buying into a falling market, but I take your point. I think your approach is totally valid, and in fact, it is a very common one where you watch the market test long-term support. Now you need upside confirmation before jumping in on the long side.
And that's why I'm saying, like, just have alerts. I'm not saying go and buy into it, but that's when you start keeping your eye on Tesla, because to me, I like to get people to understand supply and demand. That area is demand area. To me,
Mm-hmm.
that's a demand area. That's where you'll
Sure.
start seeing uh buyers come in, they start testing out that area, and you might get early buyers, like early adapters. You're going to get early buyers into that market, and you're going to see if they can push it past 417.
Mm-hmm.
Me, I would see if they can push it past 360, 365, wait for wait for a retracement, come back in, ride it up to 417. Then after that, I would look to hedge my position, see if it can get past 417, close above that, then start looking towards like maybe 430, 450, and then start selling some of my positions. And probably around that area is where you're going to probably get some resistance, because
Mm-hmm.
once you get closer to 488, usually you start getting resistant from the market, because that was its old high, unless it
Sure.
blows right past it. If it blows right
Right.
past it, goes to 504, you're probably looking at 600 very easily, very quickly.
Yeah. Well, my confirmation would be a settlement above 504.22. And then I think you can jump on the long side up to that 727 area that I mentioned earlier. Was it 727? I actually forget. It so
I think
yeah,
it was seven, like
727.
yeah, 727.
727. That's my next technical
Yeah,
target if we
yeah,
close above 504 22. You
yeah.
want to
I'm
take
talking.
one look at Bitcoin at all? I don't mean to
Yeah,
change the
one more.
subject.
We can one more before, because Bitcoin is our last one. But with Tesla, is just I'm looking to make money all the way up to the top, but also try to tell people to take profit. I always encourage people to take profit. Don't just,
Yeah.
I mean, oh, I'm just gonna ride this up to 720 and hope, but don't do that. If Take opportunity, take profit, take opportunity, jump back in, take your money that you put in off the table as quickly as possible, and let the profits ride.
I agree. That's a 100% on that one. I'll take a quick look at Bitcoin because I know we talked about that before the show. And once again, I've got like 6 charts here. I'm just going to walk you through a sequence of events for Bitcoin. We're going back to the November 21 high of 68,974, and this is the November December low area. And after this low area, I was watching this chart. We put this out on YouTube. We had an initial buy signal above this simple descending channel top. And then, which with the real kicker for me was this is the last actual channel you could construct off the all-time high at that time using the sequence of lows that occurred. And that was a 233 roughly when we closed above it. And that was in March of 23. So this for me told me that the low is in. At that time, we had put out a video anticipating this former channel bottom. This is a great example of how former structures continue to work. So when we close above 233, we're looking for 47,000, 23,300, I should say. We're looking for 47,000 roughly. And this was this channel top. It kind of held for a while. Then we closed above it. I'm just kind of, these are just channels, and more channels. At that time, we had a descending channel top that held for about a month and a half. And when we closed above the 64,370 level last October, I was expecting this long-term channel top that is now at 82,600, and we blew right through it. I mean, this was just an incredible rally. And so now, if I'm looking at this chart, as far as Bitcoin is concerned, I'm buying the 82,000, 83,000 area. I'm holding out for what I think is once again, this A minus B plus A. That is kind of what I was telling you about Tesla at 727. Bitcoin has 122,433 as I think a present long-term target. Now we're in this consolidative phase right now. And the question is, are we going to fall back to 82,600 anytime soon? And I would say yes, probably.
I
If we,
go completely agree that we're coming back to 82,000, in my opinion.
Mhm,
I completely agree. I think we might even head a little bit lower, close to the 70s.
mhm.
But
Yeah,
just to
let me
give
show you
people
this
an
chart here.
idea, I'm in the accumulation phase of Bitcoin. I try to accumulate as much as I can. I'm a long-term holder of Bitcoin. I have quite a bit of them for a while, since 2013. But this is, I honestly, me personally, believe Bitcoin's going to 1 million.
Interesting. Well, I wouldn't be surprised over time. We've certainly, we've got more than a tenfold increase now over the last a couple of years, and so another tenfold is going to take you to 950,000. In terms of the near term, though, once again, you got the low of the high that was put out back in December. That's 92,130. If we close below that this week, then over the next 2 to 3 weeks, I would expect 82,600. And I agree with you. Even the 70s, you've got a newly formed rising channel bottom that's at 69,000 roughly now. By late April, it'll also be in the 84,000 area. So this range here is kind of a band of long-term support. I think you can start buying at 82,000 all the way down to 73,000 roughly, because this could form a good low through all of 25, and above which a bullish framework continues, expecting our next objective at 122, 433. Yeah, it kind of covers it, I think.
Man, Cary, I really appreciate you coming on the show, man. It's been a wonderful conversations, and I'm hoping that we can get back on here in the future.
I love it.
I think everybody will love this. People that are listening, people that are watching, check out the YouTube Marathon Money. For those who know, I started it 5 months ago. But I'm hoping we have Cary. Check out Wicked Stocks. Check out Wicked Stocks. You got a wickedstocks.com, am I correct?
Wickedstocks.com, one phrase.
Correct.
Exactly.
Check out the
and
YouTube.
if they want to check out the free stuff, they can go to YouTube and look for Wicked Stocks, and they'll find us daily Tesla and daily NVIDIA analysis. And from there, they could certainly find wickedstocks.com, because I talk about it all the time on those videos.
And anybody that have opinions, what do you guys think of the show? Definitely let me know. I always look for feedback. But man, that was awesome to have. That definitely, I think everybody's gonna love it. We went through a slew of stocks that everybody's always interested in, and I think that's what everybody comes on Marathon Money for, to get new stocks and to also talk about what's going on in the market. One last thing before we get off.
If I could say one more thing too, if you don't mind.
Yeah.
And that is that I appreciate this show. I saw as an opportunity to highlight our work, how we go about viewing the markets. But if I come on future shows, we could come ready for just some stock picks, relevant in the moment. What's going on with this stock? A half a dozen stocks. I think that would be great to actually walk your listeners and viewers through.
No, that would be amazing. That's already something we get asked all the time. That would be tremendously amazing. But one thing where do you see the market heading to this year? Do you think it's going to be on the buy side, a money making year on the buy side for people that have 401k, Roth IRAs, long-term investing accounts? What do you think this year is going to be like for people before we get
Well,
off?
I think volatility is going to be the name of the game for the next few months until we see how the new administration is going to act, especially with respect to the tariffs. It's got kind of the entire financial world on edge right now. I think there's a likelihood that in the near term, like over the next month, 2 or 3, we can see continued downdraft, kind of a spook the longs out of their positions. But I do think there's a very good chance that over the next 6, 9, 12 months, as we get into later 25, that we'll see new highs in all of these markets. I think there's a very good chance of that. So I'm a near-term bear, but I'm still a long-term bull.
Guys, this is Marathon Money. I really appreciate you guys coming on the show. We're definitely going to have him back. Thank you so much. Reach out if you guys need anything. Check out the CEO interviews, a publicly traded company. I did Red Cat Holding last week. That was a company that went from $1 to almost $17 in 2 weeks. They're doing really well. I talked to the CEO. The show should be out this Friday the 17th. For you guys who didn't get a chance, I did add 3 trading strategies. The put play is doing phenomenal. We're already over, I think, $175 on the put option, because small cap companies, I think Cary will attest to this. You go from $1 to $1.17, you're coming back down fairly quickly. So we took an opportunity. I do think it's going to probably turn around $8 or $9. People that are already up, you already know, get out of those positions. And man, have a good weekend. Peace.
Thank you, sir.